The Australian economy slows to its lowest pace in more than 30 years outside the COVID pandemic. Get ready for a shortage of eggs and why some of the biggest names in retailing are thinking about cutting prices. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 6th of June, 2024. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we'll get to the interview in a moment because it is all about the main story today. The annual pace of economic growth has fallen to 1.1%, the slowest rate in more than 30 years outside the pandemic.
And once again, Michael, on a per capita basis, growth went backwards. That's 5 quarters in a row where that's happened. For the March quarter, the economy grew by 0.1% on the back of government spending, a build-up in inventories and a somewhat surprising jump in consumption that reflected higher spending on necessary household items like electricity and rent. The long-run average for economic growth in Australia is somewhere between 2.7, 2.8, maybe up to about 3%. Yesterday came in at 1.1. It just demonstrates how weak those figures were. In terms of the different parts of the economy, households are spending more on essential items, less on discretionary items, notwithstanding a bit of a Taylor Swift F1 effect, which actually did come out in the numbers yesterday. Government spending remains strong, reflecting more money, particularly in health and energy. Residential investment is a shocker, very, very weak. Business investment, which had been okay, actually fell sharply during the quarter. Inventories were built up again. That adds to growth. There was also a jump in imports, and that detracts from the final figure. The household savings rate fell to less than 1%, below pre-pandemic levels. Treasurer Jim Chalmers said the GDP figures show that the government's got the budget right. Well, that's probably a political statement, but he did warn of another weak quarter when the June figures are released.
Sean, I alluded to our daily interview and your guest today after the show. Stick around for this because you're speaking with Gareth Aird, Head of Australian Economics at the Commonwealth Bank.
He explains exactly what's going on in the economy, what it means, not just for inflation, but also the labour force, when he thinks interest rates will be cut. He still does think interest rates will be cut later this year. It's just a fantastic chat to Gareth about exactly what's going on in the economy. He's also informed by the fact that Commonwealth Bank has real-time data. So this GDP figure, the national accounts figure, is a bit backwards looking up until the end of March. But Commonwealth know what their customers are doing since then. And so, yeah, it's a great chat.
Yeah, it's just really, really good analysis. It is worth a listen. It's coming up after the show. Sean, you mentioned interest rates, and of course the weak number adds ammunition to those calling for rate cuts sooner rather than later. That is, of course, up to the Reserve Bank. And the Governor, Michelle Bullock, was before Senate estimates yesterday. What did she say?
She once again said the Reserve Bank will raise rates if it fears inflation is getting out of control and not heading back towards its preferred 2 to 3% target. When asked whether she'd lift rates during an election, Ms. Bullock said the board would always put inflation first, and if the data says do it, well, they will do it. Ms. Bullock also said that she preferred quarterly inflation figures to monthly data. Now, last week, April figures showed a rise in inflation. What the governor was saying was that she prefers to look at the 3 monthly figures. They are broader. She also said that the federal government's $300 energy rebate and other state government rebates would broadly be ignored when the bank thought about inflation and interest rates. Bottom line from Michelle Bullock, the economy is still on a narrow path to getting inflation back under control without large job losses, but there are plenty of uncertainties out there.
Massive 24 hours for the economy and especially for a business podcast like Fear and Greed. Turning to local markets now. Sean, how did things go yesterday?
Well, the S&P ASX 200 was buoyed by the weak growth figures because it adds to the argument to hold back on rate rises and maybe think more about cuts. So interest rate sensitive stocks did well. The real estate companies, for example, jumped. Some of the less rate sensitive sectors did okay as well. Telcos, healthcare and consumer staples. They were somewhat offset by weakness in energy and mining companies, which fell on the back of lower iron ore and energy prices globally. The net effect is that the S&P ASX 200 closed up 0.4% yesterday to 7,769 points. Among the large caps, Goodman Group, Aristocrat Leisure and Cochlear all jumped by 2% or more. REA, WiseTech Global, Woolies, Transurban, Telstra and CSL also jumped. They all did more than 1%. Rio Tinto, BHP, Fortescue Metals, Woodside and Santos were all lower. Just quickly in corporate news, online job marketplace Seek. Its share price rose 5% after it agreed to sell its majority stake in its Mexican and Latin American businesses for about $128 million. It went into that market about 16 years ago. It's now ended its foray into that region.
Sean, I know this is high risk, me offering commentary on anything, right? But is this kind of another example of what you were talking about last week about Australian businesses kind of struggling a little bit to kind of take their business model overseas and starting to just pull back a little bit, as we saw with Lend-Lease? Is this now happening kind of with Seek, kind of getting out of the Mexican and Latin American areas?
Yes, Seek has a lot of debt. So I think shareholders wanted it to pay down debt. I don't think you could say that it failed in Latin America or Mexico because it's been there for 16 years and it's had a good business there. I think it's probably, I don't know how much shareholder activism was involved in this, but, obviously they think that focusing more on Australia and New Zealand is a better option than Latin America. So there has to be some sense of what you're saying in it.
I think I got out of that one fairly well unscathed. I took a bit of a punt, and I think it paid off.
Very well done.
I'm mildly kind of surprised at that. What about international markets? What's going on?
I have to tell you about NVIDIA. It continues its climb on Wall Street. Chipmaker is now worth $2.86 trillion, not far from the market capitalization of Apple. It's about $2.95 trillion US. I get that they're big numbers, right? So the gap between 2.86 trillion and 2.95 trillion is still a lot of money, but in percentage terms, it ain't much. The Aussie dollar, Michael, is down a touch, buying 66.6 US cents. One asset benefiting from all the speculation about lower rates, particularly in the US, is Bitcoin, which popped up above $70,000 a unit. That is now 5 straight sessions of gains, the best run in 3 months. It's still about 5% below its all-time high hit in mid-March. Other cryptos have also done pretty well in recent sessions, including Ether, Solana, and BNB. Also, Michael, some of the meme coins are doing well.
Oh, yeah?
I don't understand why people buy meme coins. It is totally beyond me. But Dogecoin, which is the sort of original and best meme coin, that's doing well. Shiba Inu is doing well. Pepe is doing well. My personal favorite, Dog with Hat. The Dog with Hat meme coin is doing well also.
I think I'm going to mark this date on the calendar, Sean. 6th of June. That's the day you said Dog with Hat, and it's with an F.
Yeah, it's DOGWIFHAT, Dog with Hat.
Yep, someone with what I would like to describe you as having extreme levels of credibility. And here you are now talking about things like Dogecoin and Dog with Hat.
Well, it's just, meme coins are basically created out of thin air because they look good. They're memes. And we've also had Roaring Kitty back in the market, on GameStop and that. So some of that speculation is probably encouraged by Roaring Kitty, maybe. I'm trying to find a reason why these things would go up, and I have absolutely no clue.
Oh, I just love you saying Dog with Hat.
Dog with Hat.
It's kind of cute. All right, we'll be back in a moment with the rest of the day's business news. Sean, Australia's privacy watchdog will take legal action against Medibank Private for failing to protect the medical details of 9.7 million Australians, which were accessed by Russian cybercriminals back in 2022.
The fines in the civil action could theoretically exceed $21.5 trillion. They won't, but it's just a good number. In proceedings filed in the federal court, the officer of the Australian Information Commissioner alleges contraventions of Section 13G of the Privacy Act for each of Medibank's 9.7 million customers, with a maximum civil penalty of up to $2,220 each. Hence the $21.5 trillion. Medibank yesterday said in a statement it intended to defend the proceedings. The office alleges Medibank failed to take reasonable steps to protect personal information it held, given its size, resources, the nature and volume of the sensitive and personal information it handled, and the risk of serious harm for an individual in the case of a breach. Should the case succeed, it would be up to the court to deem the number of contraventions and how big a fine each should attract, rather than sticking to the company crushing maximum fines. That's actually in the claim.
$21.5 trillion. That is just extraordinary. Now, business has warned that the Albanese government will struggle to meet its aggressive emissions reduction targets because of the many hurdles that industry needs to overcome to deliver the energy transition.
These hurdles include building transmission lines, a pause in the growth of electric vehicle sales, rising costs, and a shift in community attitudes. The Financial Review has been holding an ESG summit, gathering many of the major players in the sector. Ampol Chief Executive Matthew Halliday is quoted as saying there's a huge challenge to secure connections to the grid for fast charging stations for EVs, while poor resale values of the electric vehicles are hampering take-up. David Gillespie, the Managing Director of gas and electricity infrastructure company Gemina, says delays in the building of transmission lines required to carry electricity from renewable sources, such as wind and solar, are stretching up to 5 years, and there's insufficient attention paid to the use of gas made from plant and other organic waste. Basically, business does not think we are on track to hit our targets. Now, Australia has a 2030 emissions target of 43% below the 2005 levels. We're aiming for net zero greenhouse emissions by 2050. The consensus is that Australia will struggle to meet it.
Sean, Treasury Wine Estates' share price jumped more than 5% yesterday after it said it was confident of meeting internal forecasts.
Investors have been worried about the performance of its newly acquired Californian luxury wine business, Dow Vineyards. Treasury paid $1.6 billion last year for that business, but management reckons Dow will contribute to earnings, and in line with what they expected. Overall, the group forecast mid to high single-digit earnings growth meant Treasury was one of the best performing stocks on the market yesterday.
Yeah, that's a bit of good news. Now, two smaller lenders, Beyond Bank and Police and Nurses, will merge, creating one of the country's largest mutual financial institutions.
The new group will hold assets around $40 billion and have a customer base of 450,000 people. Financial institutions are not cheap businesses to run, with significant capital and regulatory requirements on top of investments needed in tech and cybersecurity and digital banking, all those sorts of things. As a result, being small isn't always a great option. The chair of both groups basically came out and said they will create value for customers because bigger is better. Quite a few of these smaller institutions have or are looking at merging to remain viable in that financial institutions world.
Now, Sean, I mentioned this one at the top of the show. There could be a shortage of eggs available on supermarket shelves in coming days and weeks after more than 600,000 laying hens were culled in an effort to limit the spread of avian flu.
There's now been 3 cases in Victoria, though fortunately the strain of bird flu in each is different from the one spreading wildly in parts of the US. There are more than 21 million hens in the national egg flock and more than 100 egg farms in Victoria. The 600,000 make up about 3% of the brood. The impact is already hitting retailers, though industry members said customers can shop around. You should still be able to find eggs. New South Wales and Queensland produce about 266 million dozen eggs each year. 266 million dozen eggs. Victoria produces about 85 million dozen. Now, this is one of those stories that just occurred to me. Why do we sell eggs? Why do we talk about a dozen eggs?
It doesn't make a huge amount of sense, does it?
I did research. I Googled nicely and found out. So I know the answer. Do you have any idea?
No. And if I was to say something, I would just be making it up about kind of we used to have 12 fingers and we evolved away from that.
Let me tell you, it's actually a combination of old Anglo-Saxon and Roman systems of measurement, became known as English units. Eggs were sold by the dozen because one egg was sold for a penny and there are 12 pennies in a shilling. So a shilling worth of eggs was 12 eggs, became a dozen eggs. Simple as that.
And it stuck around.
And it stuck around.
Even though it makes a heck of a lot more sense to sell them in units of 10.
Does it, though?
Yeah, and one per finger. I mean, clearly I've got an obsession with measuring eggs using my fingers here, Sean. So
I just think, I never knew that's why a dozen eggs was, that's why you get a dozen eggs, because there's a dozen pennies in a shilling.
No, well, confession time, I didn't realise that there were a dozen pennies in a shilling.
No,
and I should not admit this because this is highly incriminating, but I once walked into a Subway restaurant and asked them how much longer a foot long was than the 6-inch.
Were you serious or were you being... Oh, Michael.
Can we get to international news, please, Sean?
Yeah, please, let's go.
Thank you. I think I've got no hope. I've got no hope of salvaging any credibility here today. US retailers, Sean, having spent 3 years pushing prices higher, are now lowering tickets in an effort to attract price-conscious consumers.
So big pharmacy group Walgreens last week said it will lower prices on over 1,000 items. Target recently announced price cuts on 5,000 food products and household goods. Target being not just a department store, but a supermarket as well in the US. In April, Walmart introduced a private label food line and said more than 70% of the products will cost less than $5. And furniture stores like IKEA have also said they'll drop prices on popular items. This is all according to a story in the New York Times. During the recent March quarter earnings updates, some companies said they plan to slow price increases and find other ways to expand profits simply because people are not spending as much money. Starbucks and Coca-Cola, for example, reported flat sales volumes, though in the case of Coca-Cola, the actual total amount was higher, but volumes were flat. Fast food group Wendy's earlier in the year floated the idea of pricing goods differently at different times on the day, depending on peak demand periods. Didn't happen, but really fascinating idea. Even McDonald's is struggling. It's facing a massive consumer backlash in the US because the average cost of a Big Mac has gone from $4.39 US dollars to $5.29 today. That's up 21%. There you go.
That is huge.
It's just really interesting that all these well-known brands are starting to cut prices because of the consumer habits of, stopping buying stuff.
Yeah. Another one, Sean, this one is fascinating as well. De Beers is synonymous with diamonds, of course, but now it wants to become known as a retailer, competing with the likes of Cartier and Tiffany.
In an interview with the Financial Times, the head of De Beers says he aims to transform the diamond miner into a leading luxury retailer. This follows its worst year in more than 2 decades. Chief Executive Al Cook says the future of diamonds is way beyond mining. De Beers suffered from a big slump in diamond sales last year as high interest rates and inflation hurt earnings. There's also plenty of competition from synthetic lab-grown gemstones that hit demand for the diamonds mined by the group. The company estimates $4.5 billion US dollars of cheaper lab-grown diamond sales last year deprived mined diamonds of about $7 billion worth of sales in the US alone. Now, India, which is set to become the second largest diamond market, is a target geography. De Beers, of course, is one of the 4 divisions of Anglo American, which until last week could well have been part of BHP.
Sean, I know we're finished, but just one final quick point to make. Did you know that in 1970, the Metric Conversion Act was passed, which meant that the metric system was the sole system of measurement in Australia? That was in 1970. 16 years later, in 1986, I was born, which is why I was not aware that there were 12 inches in a foot.
But just going into a subway, I mean, to be honest, I don't know that I knew that 12 inches was a foot. But if I went to a subway and it's like you get half one, which is 6 inches, you'd imagine that 12 inches.
To be fair, it was also my first time in Subway. This was many, many, many years ago. And so I was very new to the whole experience.
Right.
Does any of this improve the outlook for me? No?
He doth protest too much.
I think I might. All right, up next is the Fear and Greed Daily interview. You're speaking today with Gareth Aird, Head of Australian Economics at Commonwealth Bank.
All about yesterday's economic growth figures and what it means for interest rates.
Yeah, it is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It is Thursday, the 6th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.